This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping the show on December the 6th, 2013. Our time is 8:41 Mountain. Our radio show runs on your favorite radio stations. Also, the show is archived on Harold's websites, hesradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in World Financial Report on Radio. The radio show is portable. We go anywhere you do with your portable device. Harold does daily market commentary. You can find it on his websites and on the podcast site as well. As we tape today's show, jobs numbers coming out of the United States. They had been expecting 185,000. They got 203. The jobs, well, the unemployment number went down to 7%. A lot of people believe seasonality is playing a big part here. Obviously, that starts the talk of, will the Fed taper quantitative easing? They're doing $85 billion a month. Will they pull it back? It's interesting to note, in our free weekly newsletter this week, and you can get it from Harold at rarecoloreddiamonds.com, 1-800-432-1022, or Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium, 1-866-623-2002, wwpmc.com. You can get our free weekly newsletter. You can see the charts I'm going to talk about. The Fed now owns 1/3 of the entire U.S. bond market. You heard correctly. Also, institutions have been dumping billions of dollars in stocks all year, but now the selling is really starting to accelerate, and you can see that in a chart we have. Also, a chart of the week. The stock market is at an all-time high, but many Americans don't care. One of the reasons? Well, according to Gallup, only 52% of people are in the stock market. Another chart, one of the real surprises is that there's a real economy, and then there's the stock market. And we have a chart of the S&P 500, which is going up, and 2013-14 U.S. GDP growth estimates, which is down. The stock market is not the economy. And one thing Harold has warned us about for quite some time, in another chart, the top 4 U.S. banks hold $217 trillion in derivatives. The total number of U.S. banks has dropped to a record low, but $217 trillion in derivatives. Very scary, to say the least. Harold was on Bloomberg Radio. Originally, we had said he was going to be on at 12:40 Mountain Time. They had him on at 12:15. And Harold will have on his website that interview for those that missed it. I did miss it myself. And as well, there was an outstanding seminar Harold had last night at rarecoloreddiamonds.com. And I know that Harold, a lot of people signed up for the free seminar, talked about investing in gold and silver, platinum, palladium, also diamonds. And your Bloomberg interview was a smashing success as well. You're getting to be very well known, and not just because of our radio show for the last 12 plus years, but it's starting to spread as a result of Bloomberg as well.
Well, thank you very much, Randy. It was a great week as far as that goes. The seminar last night was amazing. For a Thursday evening, we had 100 people attend the seminar, so very ecstatic about that. It just shows that there's a huge interest in the alternative market, and the diamond seminar last night was spectacular. The interview on Bloomberg, again, we apologize for that. They had originally stated that we'd be on 2:40 Mountain Time, Eastern Time, and they moved it up to 2:15. So you will be able to listen to it. If you didn't hear it, I'll gladly send you the link, and we are going to be on again in the very near future. This week was a crazy week. The market was so choppy. The Dow was down every day except for today, Friday, that we're taping the show. Gold's been up one day, down the next day type of thing. There's no consistency in the market at all at this particular point. But once the job numbers came out today, gold was down about $4 or $5, and gold all of a sudden was up $13 based on the job numbers. So figure that one out. But as we're taping the show right now, gold's up $8 at $12.34. Silver up 16 at $19.70. Platinum platinum down $4 at 13.65 even, and palladium up $2 at 7.41. The metals are just trading in the lower end of the range. They're holding in the support level. The major support is obviously at 1180, which is the lows that we saw when the market came down. I do believe that that number will hold, but again, with the way that they're playing with this market, nobody ever knows. The fact is that the bull market that we enjoyed so much for 12 years, where the market was a dependable market, where we could basically determine what the moves were going to be over the next year-to-year type of situation, is now almost impossible, because the fundamentals that are so strong for gold and silver don't seem to be moving the market like they would be, which again tells me that there's a greater plan at this point here. I know it's a short-term situation, but the fact is it appears that the only thing that's important in the United States right now is the stock market. The fact is that the stock market is going up, but as Randy mentioned at the beginning of the show, not a lot of participants. You've got the hedge funds that are in there, and you've got, the big computer traders, but basically the mom and pops aren't in the market. They got wiped out in 2008. So again, it's an interesting time. And the chart also that Randy talked about, I think is the most interesting, is the chart, and it definitely shows what the state of the United States is really in, is that the green line shows that the S&P 500 is at all-time highs, but the growth, which is the GDP, is at all-time lows. It's comical, actually. It makes no sense, because the stock market is supposed to be a reflection of the U.S. economy, and it's not, because if it was, there's no way in the world that this chart would look the way that it did. We'd be looking at right now, if they weren't putting $85 billion a month into the marketplace, there's just no way in the world that the stock market would be at record highs right now. It'd be closer to 8,000 or 9,000. The fact is that Black Friday was not a strong shopping day. There's still a lot of people out of work, and even though the job numbers came out a little bit positive, the fact is that they don't show the correct numbers anyway. So we don't believe an awful lot of the reports that are coming out at this point, and they seem to be only for one benefit, and that's the benefit of the stock market moving up. However, Randy did also report at the beginning of the show that the amount of selling from insiders is at record levels. So why is the stock market going to record highs? It's the same old adage. The small investor starts creeping back into the market as the smart money comes back out. That's the telltale sign that the market is going to fall, when the insiders are selling and the general public is starting to get back into the market. They always buy at the wrong time. They buy at the highs, they think they're missing something, and they just don't time it correctly. So the fact is that I haven't had money in the stock market for a long, long time, and that's basically because I don't trust what's going on. And any day we could wake up and see a repeat of 2008 when the market's plummeted 50%. So again, I think the best chart that we can see in the newsletter this week is the S&P at all-time highs, but the GDP, which is really the growth of the United States, is basically at an all-time low, and that just doesn't coincide. So again, I would continue to own hard assets, physical hard assets that you own outright that nobody can take away from you. There's a big difference, and I know this sounds confusing from time to time, but there is a big difference between the actual futures market, which is basically trading contracts, and the physical market. The physical market is very tight. There's not a lot of physical gold and silver available, and if you're one of the ones that go out and try to buy physical gold and silver, you'll see that the spread between the bid and the ask is extremely high, and that reflects the shortage in the actual physical market. So how in the world could there be an actual physical shortage in the gold and silver market, and the premiums they're charging to buy physical gold and silver are strong, but the prices are dropping? In my life, and I've traded this market for 35 years, I have never seen anything like this. So again, I think that I've actually calmed down at this point and could sit back and realize that we're going to have to go through this phase to where the government is so desperate that desperate times bring on desperate measures. And let's face it, you can't fight City Hall, and they can do whatever they want. So basically at this point here, we'll see where the metals take us on the low side. We still have about $50 between the major support level, which is 1180 in gold, and we have about $1 in silver. So again, I think that we could possibly test the lows that we saw, but I am still very bullish on that market. And again, scratch my head as to how the market doesn't see the difference between the physical shortage of gold and silver and what's happening in the paper markets. Again, I do believe that we are going to see a different type of market that we've experienced, that we've had so much joy for the past 12 years, except minus the last 2 years since 2011, when they've hurt this market by raising margin requirements. So what I think is going to happen is that it's like a coiled spring. It's been pushed down and pushed down and pushed down till it can't be pushed down any longer. And what's going to happen is that this spring is going to explode, and we're going to wake up one morning and you're going to see gold up $200 or $300, and you're going to wipe the sleep from your eye and not believe what you're seeing. And silver will be up $4 or $5. I've seen those type of scenarios happen before. I would prefer the type of market that we saw for 12 years that we're in a major bull market. You could depend on it. You could determine what the next move was because of if you understood how to read charts, which I do. But those are all thrown out the window right now because, again, nothing makes any sense in this market. Why in the world would gold be down $6 this morning and when the job numbers came out, jump up $13? It doesn't make any sense. So basically, again, I think that going into 2014, I think that there's a lot of trouble out there. The numbers just don't match up. And as long as they continue to print and quantitative easing, the stock market will continue to go up. Now, if they believe at any time that they think that the economy is actually getting better, then they're going to start to taper. And that's when the real telltale sign will be. That's when we're going to determine how strong the U.S. economy actually is. So when they start to taper and no longer putting $85 billion a month back into the market in mortgage-backed securities and everything that they're doing, we're going to see how the market holds up. My gut feeling tells me the market will fall heavily, and then they'll panic, and then they'll bring back quantitative easing to stabilize the market. And if that doesn't tell us that this is a phony economy, that is exactly what we'll learn when they start to taper. So again, we'll see what happens. That could happen in the first quarter of 2014. In the meantime, because of the job numbers, which again, nobody really outright believes, and let's face it, it's a holiday season. They're supposed to be hiring people. The Dow is up 112 points at 15,933. Aside from that, it was down every other day this week. The NASDAQ up 11 points at 4,044. The TSX is up 92 points at 13,293, but again was down almost every day this week. The U.S. dollar is doing nothing. It's down to close to the 80-cent level at 80.34. The Nikkei is up 122, but that's been down most of the week at 15,299. And the best performer of all has been oil. Oil's up another 19 cents, but oil this week went from $92 to $97.5 that we're sitting at right now. You know we're bullish on oil, and the reason that oil backed off from the $108 level that we're at about a month and a half ago is because they actually believe that Iran is going to be good, which again is a fairy tale. We all know that. And again, the market has certainly reflected that this week by going from $92.50 to $97.50. We saw a $5 increase in crude oil this week, and that's inflationary. And so is printing money. And so is almost everything else that's going on, except the fact that the markets are not reflecting that. So what we have to do is we just got to sit back and bide our time. We're not traders of gold and silver. We're holders and buyers, and we hold it as a hedge against the bad things that are coming forward. And there's absolutely no doubt that bad things are coming forward. We haven't heard a lot about Europe, but Europe's just in as bad a shape as it was 6 months ago. They just don't talk about it. The other situation is China. Do you think that China really is doing well? It's difficult to get information out of China because they're a communist country, but the bottom line is they've got these ghost towns. Their business cannot be good, and basically what I'm reading is that China's in trouble too. The only difference is that China has gotten very heavily into the hard asset market. They've gotten very heavily into the gold market, and they're capturing as much gold as they possibly can. My feeling is they're going to back their currency with gold, and that's why they're doing what they're doing. So 2014 is going to be a very interesting year, and we're going to see what the markets are going to produce. Now, Randy brought up the derivatives number. That is the thing that we should be most concerned about. The derivatives market is the scariest market out there, and it's unregulated. And it's 217, was that the number, Randy? $217 trillion?
Yep. Yes, it was.
That's an unconscionable amount of money to be in an unregulated market. And we also know that in most cases they're so sophisticated that a lot of people that use them as financial instruments don't really understand them. And once they start to liquidate, that's when they see the problem. So that's why the derivatives market is going up, because they're buying into it, but they don't necessarily know how to liquidate it. How scary is that? $217 trillion into a market that's unregulated and is basically unknown to most investors. So again, I think 2014 is going to be a very interesting year. We're going to come up with our predictions for 2014 at the beginning of January when we come back on the 2nd or the 3rd. And again, it's going to be more difficult this year because, again, there's no trends to these markets, not like we had for 12 years where somebody who understood the markets could determine what the next move was in for the market, and we did a great job for 12 years. I've got to say how disappointed I am in what's happened over the last 2.5 years, but that was nobody's fault but the government. Basically, somebody had to say that we want to stop the gold and silver market from these unbelievable rallies, from $250 to $1,900 gold, and they stopped it within 1 week. It was an unbelievable thing, and to think that that could happen to what is supposed to be a free market is just unconscionable in my opinion. So, again, I really don't understand how people could really be trading in these markets realizing that they have absolutely no credibility, especially after the last 2 years, when that company, what was it, MF Global, Randy, in Chicago,
that's right,
that stole everybody's money from the segregated accounts. It's like you're a lawyer walking away with your escrow account, and the fact is that the exchange in Chicago that happened on didn't make good on the money, and I don't know why people even continue to trade in that market because there's no credibility anymore. The world has changed tremendously, and due to tremendous greed that we saw moving forward, which is what led up to the 2008 debacle when the derivatives market and Lehman went out of business and the stock markets plummeted, and what happened in mortgages, which is still happening, we just never learn. And the fact is that these banks and mortgage companies and brokerage firms are leveraging their positions by 30, 40 to 1, and they got into so much trouble. All the banks were closing down. It wasn't that long ago. It was 2008. We just got to go back and remember those times because it's going to happen again. Because if you don't learn from history, history always repeats itself, and we're doing the exact same thing that we did that led to the trouble of 2008 and 9, Randy. So, again, my suggestion is to change the way you think. If you're in the stock market right now, you should be very nervous. You got to get the newsletter, and you got to look at that chart on the S&P versus growth in the United States, and if that doesn't tell you what the real story is, I don't think anything will. My suggestion is to be very, very conservative going into this next year. I don't think it's going to be a good financial year. I don't see how it can be. And on top of that, again, we've got all these landmines like derivatives and things like that out there. So my suggestion, own physical gold and silver, own physical diamonds, keep a little bit of cash on hand, but don't keep more cash in the bank than the insurance companies will cover you for. And again, be prepared for next year for some very severe markets that could really turn the tables on you. So again, if you care about your money, and I know we work very hard for it, we got to come up with a game plan that makes sense. And my suggestion is to own physicals, own the actual asset, be able to hold it into your hand, and don't heavily leverage anything at this point, because again, if you get into the heavy leverage that the banks are in at 30, 40 to 1 like a futures contract, you're going to find that the chances are 90% of the people lose their money.
Speak with Worldwide Precious Metals. That's the company Harold recommends you use when it comes to investing and starting your own precious metals investment account. A great precious metals company out of Vancouver, British Columbia, leading Canadian and worldwide precious metals bullion dealer, recommended by Harold for over 10 years. They're the experts to trust and work with in these very specialized markets. Start your own precious metals investment account today. All gold is allocated either wholesale or premium. Worldwide is there to help you maximize profit, minimize the risk. You will have instant liquidity in and out of the market with just a phone call, 24/7 online access. The metal can be stored on your behalf, insured to the full value of your investment. Ask about domestic or foreign storage and premium storage in specific coin and bar form. Stored metal is outside the banking system. The metal can be delivered to your door, and Worldwide has worldwide access to the physical precious metals you want today. Connect with them. Their website, wwpmc.com, a great website that explains all the ins and outs of investing in gold and silver, platinum, palladium. Their telephone number, 1-866-623-2002. They had a seminar here in Edmonton, and it was completely booked up. It was free. In fact, we could have had hundreds and hundreds of people, but they limited it to 2 small groups. It was about the banking system in Canada and around the world. They had a big crowd in Toronto. They are, in 2014, going to be bringing that seminar back for Edmonton, Calgary, and Toronto. If you were one of the ones that wanted to go but did not get a seat as a result of it booking up very quickly, remember this is a free seminar. Speak with Worldwide Precious Metals and get your name on the list now for one of the 2014 seminars in Toronto, Edmonton, or Calgary. The shocking truth about the Canadian banking system. Connect with them, wwpmc.com, telephone number 1-866-623-2002. We have about 2 minutes left in our segment. It was interesting this week. Egon von Greyers, he was quoted as saying, "I expect many markets to turn during 2014, especially the stock and bond markets. They are in a historical bubble and will soon start their secular bear markets, leading to massive wealth destruction. Many investors will sadly hang on to their stocks and bonds, but even if you don't believe that your fortune is in for a nasty turn, investors should realize that you can't buy fire insurance after the fire. And there's no better insurance than a significant investment in physical precious metals stored outside the banking system." And if you take a look at what's in the newsletter this week, we have Jim Rogers cautioning, be prepared, be worried, and be careful. This is going to end badly. Eventually, the whole world is going to collapse. And he was speaking on the CBC. In fact, he said, "We in the West have staggering debts. The United States is the largest debtor nation in the history of the world." He adds that it's going to end badly. Mark Faber, famous for the gloom, boom, and doom report, told CNBC, "Right now we are in a massive speculative bubble, and that is all due to the fact of quantitative easing." In fact, John Malden came out with an interesting article, and he said the same people who brought us the great financial crisis have created a dangerous new paradigm thanks to quantitative easing. Get our free weekly newsletter. Speak with Worldwide Precious Metals. Connect with them at 1-866-623-2002. The website, wwpmc.com. Going to come back and talk about diamonds. As the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on December the 6th, 2013. Our time is 9:06 Mountain. Radio show runs on your favorite radio stations. It's also archived online. You can listen to it anytime you want. We have a podcast. The podcast is through iTunes. Go to iTunes, type in World Financial Report on Radio. We are portable. For any portable device, you can listen to the radio show on iTunes, the podcast. As well, Harold does daily market commentary. And that market commentary can be found on his websites and the podcast site as well. Harold recommends only one company to invest in with gold and silver, platinum, palladium. That's Worldwide Precious Metals. Speak with them, 1-866-623-2002. They had in 2013 some outstanding seminars about the Canadian banking system, worldwide banking system. I had a chance to see it. I was literally shocked. And remember, I'm gathering information on a weekly basis, and some of the things that were brought forward really did surprise me. In 2014, they will be back in Edmonton, Calgary, and Toronto putting on this free seminar. If you'd like to get your name on the list early, book a seat now, absolutely free. They will go very, very quickly. And connect with Worldwide, wwpmc.com. The telephone number 1-866-623-2002, 1-866-623-2002. Harold's website for diamonds is rarecoloreddiamonds.com. The telephone number 1-800-432-1022, 1-800-432-1022. Rarecoloreddiamonds.com is the website. Harold's auction site is hsfineauctions.com. This week's featured diamond is a stunning 3.06 radiant cut, fancy yellow, internally flawless. You can check it out online at rarecoloreddiamonds.com and get our free weekly newsletter from Harold via email free of charge every week. You can see a picture of it in our newsletter. Click on the link. It will take you to the website and you can see video. Harold has been interviewed by Bloomberg twice. He was interviewed by Carol Masser and he was interviewed by Deirdre Bolton. They spoke about investing in colored diamonds and his website, HS Fine Auctions. We have the information in our newsletter. He was just interviewed on Bloomberg Radio. We will have that for you as well. And if you look at the entire month, it was an amazing month for diamonds. And the reason we say that, there was a pink diamond that set a record $83 million for a 60-carat pink diamond. We also had an orange diamond that sold, a $36 million price tag on that. It was just an amazing month for diamonds, Harold, and we had auctions from Christie's and Sotheby's, and everyone was just ecstatic about what was happening in the diamond market as a result of those big diamonds selling and what we saw over in the Far East, over in Geneva as well. Now is the time to take a look at investing in diamonds.
You better believe it, Randy. It was very, very exciting. Obviously, if somebody is willing to spend $83 million on a diamond, it better be a good investment, and that's why they put the money into it. On top of that, I understand that the inside information on that orange, it was supposed to sell for $17 million. It ended up selling for $35 million, and then was sold 10 minutes after that for much, much more than that again. So the diamond market is on fire. I still think one of the best articles was the one that came out last week, Randy, when they talked about Lawrence Graff buying a diamond at auction for $4.2 million, selling it, and then rebuying it 8 years later for double what he paid for it. If that doesn't tell you about the profit potential of owning diamonds, I don't think anything will. He sold and bought that diamond again within a 4-year period, and he paid double what he paid for it 4 years ago. So that's a very, very exciting situation. I've never been more excited about the diamond market than I am right now. It's in the news every single day, and the fact is that a lot of the things that we brought to you are really starting to come forward. Yellow diamonds at auction are setting records at almost every single auction. The fact is that we own yellow flawless diamonds, which are the diamonds to own, and again, they're very, very difficult to get, and there's very few of them on the market. So these are the type of assets that go up tremendously. Now, you know, if you see the auction results and you're looking at diamonds for $83 million and $35 million and $30 million, most people are going to say, you know, who can afford that? That's not what we bring to the table. In actual fact, if you look at what the real auction results were for that auction last week, that auction where the big pink sold, it was really the smaller pink diamonds, percentage-wise, that went up the most. There was diamonds that were supposed to sell, some fancy orangey pink diamonds. It was an 8-carat. It was supposed to sell for about $100,000, and it sold for $850,000. There was another orangey pink that was supposed to sell for just under $100,000, and it sold for $500,000. So, you know, the thing is, it was a lesser expensive diamonds, the diamonds that were under $100,000 that really made the biggest returns. And that's what we bring to the table. Our diamonds start at $20,000 for investment quality diamonds. The fact is that most diamonds are not investment quality. To look at diamonds that do actually have a track record and that do go up in value, you've got to look at certain asset classes. You want to look at the yellow flawlesses and look at the track record of that diamond going back to 1980. In 1980, you could have bought a 1-carat yellow flawless diamond for $500 a carat. Now they're $20,000. In 10 years from now, those will be $30,000. So the fact, I'm sorry, way more than that, because they go up by 15 to 20% a year. And by the way, these yellow flawless diamonds are also a hedge against inflation. In 1979 and 80, when we had massive inflation, these type of colored diamonds went up 500% those 2 years. So these are amazing assets. They never decline in value. We can sell them in another currency for you. We own our own auction business, and that's how you liquidate and sell your diamonds. And with the state of the world economy, how dangerous everything is, obviously a lot of the most positive news that's coming out in the publications today is all about diamonds. So again, I couldn't be more pleased with what's happening and how this market is developing. Now, it's not a short-term market. You don't buy a diamond today and sell it a year or two from now. You're just not going to make any money. You want to hold on to it for 10 years. In the case of Argyle Pinks, the Argyle Pink diamond market is probably one of the best markets you could ever buy into, because the Argyle mine produces 95% of the pink diamonds in the world, and that mine is going to close in 6 years. That means 6 years from now, and give it maybe a year or two for all the diamonds to run out, there will not be any more pink diamonds, and the prices will continue to skyrocket. They're probably the best investment that you could make today. You can buy an Argyle Pink diamond in the 40 to 50,000 range and sell it 10 years from now for 3, 4, 500,000. That's what the potential is in the rare diamond market. And as you can see, I'm not talking about buying a 30 or 40 or a $50 million diamond. I'm talking to you about buying diamonds in the 20 to 50 to $100,000 range. To get a vivid pink Argyle, the best pink that you can get, you can start to get into those in the 50 to 100,000 range. Those diamonds double in 2 years. You buy a $100,000 vivid Argyle Pink, 10 years from now, that diamond could be worth $1 million. That's your chance at retirement, not the stock market, because there's no doubt it's either going to be in 2014 or 2015 that market is going to crumble again. And my guess, it's going to happen next year. You need to be diversified. You need to own assets that you can hold on to, and you need to own assets that increase in value. You know, even at this particular point, capital preservation is one of the most important things. If you keep your money in the bank, you're getting 2% return on your money, and with inflation the way it is right now, so you're not making a single dime. On top of that, if you're keeping over $125,000 in the bank, you're susceptible to losing that money because you only have $125,000 worth of insurance on your bank account. But you're only making 2% in the bank. Why not buy a diamond and make 15%? And give that diamond a potential, if you put it away for 10 years, to make your family some serious, serious money. Because right now, a $20,000 yellow flawless in 10 years from now will be worth about $80,000. And that's something that you can rely on, as opposed to what is going to happen with your stock or commodity portfolio. So again, diversification is very important. Take some dollars that are not working for you, that are at risk in other areas, and put it to work for you in the extremely rare diamond market. Now, my company, I live this business. I don't even take vacations. To me, I love so much what I do that my business is a vacation to me. So the fact is that I do this all the time. This is what I do 24/7. So I take this business very, very seriously. And when I looked at the diamond business in general, I looked at it as a supply and demand scenario. And when you looked at, there's maybe 100 to 120 yellow flawless diamonds available for sale a year that are cut, and most of those are sold to my Canadian clients. It creates a shortage in the market. And the fact is that these mines will not continue forever, and these diamonds will not continue forever. If you look at holding a diamond for 10 years or longer, let me show you what the potential results for. In 2003, at the Argyle Pink Diamond Tender, I bought a beautiful 2-carat fancy vivid purplish pink Argyle diamond. At that point, it was expensive. It was $350,000. It was 2 carats and vivid in color, which is the best color that you can get. Well, that turned out to be one of the great investments I've ever made, because today that diamond is worth about $3.5 million, and 10 years from now, that diamond is going to be worth upwards of $15 to $20 million, and I bought it for $350,000. Try to find a 2-carat vivid pink Argyle diamond today, and if you can, you've got something that is beyond rare. Now, just so you know, for those that are in the money, I do have vivid pink argyles put away that are over a carat. So if you are in that financial wherewithal and you can invest upwards of 7 figures in a diamond, I do have some diamonds put away from my private collection that I would show you that are vivid in color and over a carat, which really don't exist anymore. And in 10 years from now, when this mine closes down, you're talking about diamonds that will sell in the 6 figures. In the 8 figures. Not just in the millions, but higher than that. So the fact is that these diamonds can take on a life of their own when there's a shortage of them, and that's exactly what's happening. The other thing about the Argyle mine, we're not buying as heavily with Argyle as we used to. And the reason for that is that the last couple quarters, the diamonds were not up to par. It means that there's brown seeping into the mine. Now, that's why Argyle is starting to show their champagne diamonds, which are beautiful diamonds, but they're basically brownish yellow diamonds. Those are not necessarily considered investment quality diamonds. The investment quality diamonds that come out of the Argyle mine are their magnificent pinks, and the odd time a red diamond will come out. So the fact is, while they're still in operation, they are still producing diamonds, but very, very few of them are the colors that we were getting 2, 3, 4, 5 years ago. So the fact is that I have these type of diamonds put away in my inventory, and you may be asking yourself, well, if you own these diamonds, why don't you just keep them for yourself and sell them at a fortune down the road? Well, that's an excellent question. For starters, I'm in the business of selling diamonds, and I built my auction business based on reselling my clients' diamonds, and that's what I built my entire business on. However, my collection is very large, and I do continue to add to it. But I do bring diamonds available that are extremely rare, and also some diamonds that are at extremely good value still, and I make those available to the listeners of my show and to my clients. So again, if this is something that you would like to get into, I recommend it very, very highly. It's something that will bring you tremendous pleasure, because when you see these diamonds, they'll take your breath away. They're nature's art. You've never seen anything like them. In fact, most jewelers have never seen anything like them. So yellow flawless diamonds, just slightly over a carat, are in the 20,000 range. The intense yellow diamonds that are slightly stronger color are in the 30,000 range, and when you get into the vivids, they're in the 65, 80, 100,000 range per carat, because the vivids are the strongest color you can get. They're very, very difficult to find now, but I do have a small inventory of those. As far as the Argyle pinks, you want to buy the fancy pinks, the fancy intense pinks, the fancy deep pinks, and the best of all are the fancy vivids, and those fancy vivids are doubling every 2 years now. The fancy intense and the fancy deeps and the fancies are catching up fairly quickly, and again, judging by what's happening with Argyle, their production is down, and these beautiful pink diamonds will be no more. And again, the best example I can give you, aside from my 2-carat vivid pink, is my wife's girlfriend, whose grandmother bought a 5-carat pink diamond 50 years ago for $35,000, and that diamond is worth $5 million today. The longer you hold on to these, the more they go up. If you invest in a diamond and you don't need to sell it, you can pass it down to your children, and so on, and that's how these diamonds can take on a life of their own. For example, that vivid orange diamond was cut from a rough. I understand that the rough cost about $2 million. The diamond was sold for $36 million. If that's not profitable, I don't know what is. And I don't know what the exact price on the pink star was that sold for $83 million, but I believe the rough was somewhere in the $5 to $6 million range, and it sold for $83 million. So again, the diamond market is a place to have your money. Look at my website, rarecoloreddiamonds.com. We've almost completed our new learning center that will be up and around by next week. Again, I'm just seeing the new visuals over the weekend, but we have an entire learning center for you to learn about diamonds. The seminar last night was extremely successful. If you missed it, contact me, and I'll send you a link for it, and you can watch it in the comfort of your own home. It tells you everything there is to know about diamonds, where they come from, how they're cut. We actually have a video showing how a diamond is cut and polished, and it's very, very exciting. So you definitely want to see this this seminar. And if you missed it last night, just contact me, and I will email the link to you, and you can watch it in the comfort of your own home. But again, at this point, Randy, again, the press is on fire about diamonds. Go to my website, rarecoloreddiamonds.com, look at the loose diamond sections, and see our array of the most beautiful investment diamonds starting at $15,000 to $20,000.
Featured diamond of the week, a 3.06 radiant cut, fancy yellow, internally flawless. This is a beautiful, big, chunky, yellow, flawless diamond. Absolutely stunning. See the video of it at rarecoloreddiamonds.com. We have a picture of it in our newsletter. I really encourage you to get our free weekly newsletter from Harold. We send it out via email, free of charge. It has the information we talk about on our radio show. You can be on the same page that Harold and I are on. And if you have not yet, listen and watch the interviews. Harold was interviewed by Pim Fox and Carol Masser yesterday on Bloomberg Radio. And that was about a 5-minute interview. Harold will have that for us. We also have 2 Bloomberg TV interviews, one with Carol Masser, the other with Deirdre Bolton. And Harold was talking about the diamond market, the colored diamond market, and his auction website, hsfineauctions.com. One of the beautiful things about those 2 interviews on television, Harold put around the neck of Carol Masser and Deirdre Bolton something that belonged to Liz Taylor, jewelry. And if you want to see 2 women's faces light up, and they both said to Harold later that it was one of the highlights of their careers to have a piece of jewelry from Liz Taylor around their neck while they were on the air. You can see it just by watching the interview and see how happy they are. And that's the intrinsic value of diamonds that no other investment has, is just the beauty of it and the wearability. And it's just something you can't put a price tag on. It is absolutely priceless to see how happy those ladies were. And as Harold was mentioning, we have an article from the New York Times. It came out a few weeks ago. It is a must-read. A rising appetite to invest in colored diamonds. And as I mentioned, it was an outstanding month. Pink diamond, $83 million, a record price for a 60-carat pink diamond. And then we talked about that orange diamond selling for $36 million. We have pictures in our newsletter of the pink and the orange. We have our featured diamond. We have the Bloomberg information with Harold. We also have the New York Times information. Get our newsletter from Harold. Connect with him. rarecoloreddiamonds.com. 1-800-432-1022 to speak with him personally and privately. And that's something people have to understand, Harold. You do speak with people personally and privately all the time. People may listen to our radio show and think that they can't speak with Harold. You can. If you would like to speak with him, connect with him via the website, the telephone number. He'll be happy to spend time with you and talk to you about your financial position and actually educate you about this diamond market. He was the one who brought it to us first in 2005. In August of 2005, he wrote a special report. He was there first. He was the one who brought the idea forward of investing in colored diamonds, and we've seen this market literally explode. We have auction reports from the last month from Christie's and Sotheby's in Geneva. Also, there were auction results from over in the Far East, Hong Kong. All simply outstanding. Harold, we have about 6 minutes left here, Harold. We can send those auction results out for those that would like to see them, because I think people can hear us talk about these things, but unless they actually see them for themselves, then that's when it really hits them hard. It's amazing. The smaller diamonds, and we've spoken about this before, the smaller diamonds with the lower price tags are the ones that are going for incredible prices at auction.
I'm so happy about that, Randy, believe me, because, again, most of my clients are just hardworking Canadians that just want a fair deal. You know, they're sick and tired of 2% return on their money. They're petrified of what's happening in the markets in general, and they just want a fair deal, and that's exactly what I'm into. So the fact is that the diamond market, it's a small market, but it's a world market, and you don't have to invest multi-millions of dollars to make money in the diamond market because, as Randy just mentioned, it's the smaller diamonds that percentage-wise went up the most amount of money. So if that's the case, which it is, then it's only a matter of how much you're comfortable investing. Most of our clients that invest in diamonds invest under $100,000. And for $100,000, you can get into the Argyle pink diamond market. You can get into the big yellow flawless market. You can get into the flawless white market. So, again, you can do extremely well in this market just by investing your hard-earned money and buying an asset that, again, never declines in value, is portable private wealth, can be sold in another currency, and is in very, very limited supply. And again, once we get the inflation and the action in the market that we believe is coming, these diamonds will take on a life of their own, and you're going to see moves in markets like you've never seen before. So, again, I love this business. My clients love what they receive. And again, at this point, the news keeps getting stronger and stronger as far as what's happening with profits in the diamond market. So again, I couldn't be more proud of what we're doing here. And again, we have the only secondary market to resell diamonds for our clients. We have H. Siegel Fine Auctions. There's not another company like it.
One of the interesting stories this week that came out that there are 10.9 million Americans on disability, and that's more than the population of Greece. If you can believe that, 10.9 million, more than the population of Greece. In Detroit, a judge did rule that they could go bankrupt. The city of Detroit could go bankrupt. As a result, police, firefighters, and other municipal workers can no longer count on a financially secure retirement based on a city-sponsored pension. It looks like, Harold, and this is very tragic, we've seen it before, they will be clawing back the pension that had been promised to those workers in Detroit because of their insolvency. We're in a time now where you need to be self-dependent when it comes to investing. You need to educate yourself. You need to obviously take care of yourself. Do not rely on governments, because we're seeing around the world with bail-ins, obviously 47.5% of depositors in the bail-in in Cyprus lost their money. We're seeing people with pension plans in Detroit. They're going to be having that money clawed back. They will not be getting what they promised. This has happened in other cities and other states in the United States. And one of the things that people are really watching going forward is the bail-in phenomenon becoming more and more prevalent, not just in Europe, but all around the world. So now's the time for hard assets. That's why we're saying have gold, silver, platinum, palladium, something you can hold in your hands. Have a colored diamond, something you can hold in your hands. Own something, invest in something that they cannot print, governments cannot print. And Harold, we have about a minute left, and I share your passion for what we have been doing on the radio for a long time, because in the short term, the markets may have been working against us, but in the long term, we've been right, and we still believe in the long term the best days are yet to come.
You bet. All you need to do is look at the charts from 79 to 80, and you'll see what I'm talking about. When this market does explode again, it's going to be like nothing you've ever seen before. It's going to be a short-term run, but to prices that nobody believed will be possible. So that's unfortunately the way the markets are today, that they've hurt them so badly that you are not going to see a consistent bull market. You're just going to see a massive run, and we'll be on top of it when that does happen.
Thank you very much, Harold Siegel, for your knowledge, and another great week.
Well, thank you very much, Randy. I wish everybody a wonderful weekend and a very profitable day.
Speak with Harold about the featured diamond, 3.06 radiant cut, fancy yellow, internally flawless, rarecoloreddiamonds.com, the website, telephone number 1-800-432-1022, Worldwide Precious Metals. Speak with them about starting your own precious metals investment account today. Invest in gold, silver, platinum, palladium. Ask about platinum and palladium. Very interesting right now, the prospects there. 1-866-623-2002. and get your name on the list for the free banking seminar worldwide we'll have in Toronto, Edmonton, and Calgary in 2014. If you missed it, do not miss it in 2014 as you did in 2013. It is a must watch. That is it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.